which we came to know that is a related party entity, which is in similar line of business. So do we have any relationship with that?
Which company?
JITF, Gift Logistics.
No, we don't have.
Okay, sir. That's all from my side as of now. I will join back in the queue. Thank you.
Thank you.
Thank you. We take the next question from the line of Subhash from Value Investments. Please go ahead.
Hello, am I audible?
Yes, sir.
Okay, I just wanted to ask, I know that in Q1 it was muted when it comes to order winning, but in Q2 and Q3, as you said, you might win some orders. So can we expect you to notify the stock exchanges about the order wins?
Pardon? Order which are going to be taken?
Yeah, whenever you win orders in the future, would you be notifying it to the stock exchanges?
This is by statute we have to announce to the stock exchange. So whenever we win the order, we will inform to the stock exchange.
Okay, got it. And also, when I look at the note number 6 in the result, it clearly indicates the other income that you have included, that is 12 crores with regards to Vivad Se Vishwas. I mean, the agreement that you have signed with the NARCL, right? The difference amount, you will be realizing it every quarter, I understand. But could you give a breakup of the finance cost that you have shown?
No, the finance cost also, there are two factors, as I told you. The finance cost, we have, as discussed in the last conference call, that we have discounted our loan book of 700 crore into the 511 crore, basically as the Ind AS requirement, and the NPV of 189 crore we have booked into that. This we have to be unwind every year up to the 7 years. This is again the Ind AS requirement. So in the finance cost, roughly around 8.42 crore, 8.6 crore, that transaction, this is only the provisional entry. We have to book every year, and it will show as an interest, but nothing is payable. The same is payable in the accumulated 700 crore. The same way there, the NARCL has given us the two options. One option is 700 crore, second is 967 crore. The difference between the first option and second option, we have booked as a deferred revenue income. And that deferred revenue income also we keep on charging into the next 8 years. Because in the 8th year or earlier year, whenever we pay the full to NARCL, then these two increase will get nullified into our balance sheet. So till 8 years, there will be around 12 crore every quarter, proportionately reduce and increase based on the repayment schedule. This will keep on charging from the as other income, and there is a 8.something crore, 8.6 crore that will keep on debiting as a finance charge into the interest expenses, but both are provisional entry.
Okay, this doesn't affect your cash flow, is what you mean, the actual cash?
It's not affecting any way our cash flow. We have to pay 700 crore, and that is cycle-side. We don't have to pay more than that. Out of which 224 we have paid, 40 we are paying into this financial year from the sale of property.
Okay, sir. Thanks. Thank you for the clarification. So out of the 10.29 crores of finance cost, what is the actual finance cost that is actually affecting your cash flow? Maybe you would have taken some short-term loans, right, for the project?
Charges, etc. This is total 1.45 crore. 1.5 crore that you can say is the finance cost in 30th June.
Okay, just 1.5 crore. Okay. Thank you.
1.5.
And just my last question. So do you have any, can you quantify the revenue guidance for FY25 or FY26? Like, what is the target revenue, the number that you are targeting for the year?
That based on our order book, we are targeting roughly around 2,000 to 3,000 crore order book into this financial year. When we will get how much we will execute into this financial year, that will get impacted. From our existing operation of our order book from us and JV, we will book roughly around 50% we will book. So the whole year from our operation and JV will book around 800 to 1,000 crore, plus the order book whatever will come. When we will get how much will be implemented into this year, we will on updating you in every quarter.
Sure. So you clearly guided us that around, not exactly, but around 50% of the 2,000 crore order book will be booked in FY25, right?
50 to 50% we'll book into this year.
Okay, fine. Thank you so much. That's all I have.
Thank you. Before we take the next question, a reminder to all the participants, if you wish to join the question queue, you may press star and 1 on your touchtone telephone. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. We take the next question from the line of Tej Patel from Niveshaay. Please go ahead.
Yeah, thank you so much, sir, for the opportunity. Again, I wanted to know, you already said that, the 10,000 crore worth of opportunity that you are looking in, but can you give, and you are expecting around 2,000 odd crores of order inflow this year and then probably in the next financial year too. But what would be your bidding pipeline, the number of projects you have bid and in terms of value, how much would that be right now?
As I told you, we have made our certain guidelines. One is our eligibility, second is the business opportunity, third is our internal guidelines. So if you see the opportunity, the government has a spending of roughly around 10 lakh crore in next 5 to 6 years, so there will be opportunity of 1 lakh to 1 lakh 50,000 crore definitely into every year in the water sector. Number two, our eligibility will be around 75 to 80% into that, subject to the tender size which they are going to be published. Third, our targeted, because we have made certain discipline into our organization that which type of business we are going to pick, for which we have a main criteria. It is a fully funded project. It should be easy to operate. It should be completed within 3 years or 4 years of operation. It should be mainly into the bulk area. So all these targets which we have made, we are targeting that roughly around, at the moment it is 10,000 crore of order which is in our targeted area. It should be around 40,000 to 50,000 crore into our targeted area in a year. And our target is 3,000 to 5,000 crore to be taken from this 40,000 to 50,000 crore of business.
Okay, I get your strategy in the market size which you are telling me, but I wanted to know, have we bidded for any projects as of now? Have we put bids for any projects? Because
as I told you, 10,000 crore we have, out of which roughly around 3,000 crore, 4,000 crore we have already bid. Rest of the things, their bidding date is coming. So whenever it will come, we will keep on bidding. Afterwards, maybe next month again few bid will come, and out of our targeted project we will keep on bidding.
Okay, so you are saying right now you have bidded for projects for around 3,000 crores.
It is out of this 10,000 crore we have bidded quite a bit. I will give the exact figure, but we bid quite a bit, and we are targeting that out of which few of we should get succeeded in a month or two.
Okay, and sir, what's our current? Sorry, pardon me, if I ask this question again, but what is our current, FD which we have right now? So I just wanted to know how much bank guarantees we can take up so as to to bid more number of projects.
As I told you, we have the visibility. At the moment, we have around 80-90 crore of fixed deposit. We have the visibility in next 2 to 3 months, another 40-50 crore of Vivad Se Vishwas money, which is at the final stage, and any day we can come. And we have the promoter's warrant also. So roughly around 160-170 crore visibility we have. That fund will be available for the BG purpose. So we are also talking to the bank for further BG limits. So this fund, 150 crore, will be available for me for getting the order book of 3,000 crore. So that is sufficient. We are also exploring for fundraising. If that happens, that will give further availability of bidding. Plus, we are discussing with the banks for the bank limit also.
Okay. Okay, sir, got it. And sir, just I wanted to know, a bookkeeping question. Sir, you said the order book is, the rest 1,000 crore is with the JV, right? But in terms of top line, the revenue would come from only those 1,000 crores order books which you have and which you will be executing, right?
Our portion also come into our revenue. So roughly around 2,000 will come into our revenue, out of which 40 to 50% this year and next year 40 to 50%.
Okay. Okay, no problem, sir. Got it. Thank you.
Thank you. We take the next question from the line of Megha from PI Square Investments. Please go ahead.
My question is on the other income. If you could just specify the nature of the other income that we've received this quarter and what is the amount we are expecting in the quarter going forward?
This other income is mainly including of the deferred portion of the deferred revenue expenditure of 12.5 crore. That will come into every quarter approximately. And rest is basically the interest income, etc. on the FD what we have.
Okay, so this is likely to continue.
That both will likely to continue. Interest will keep on increasing and this will likely to continue this next 8 years.
Okay. And I joined the call a little late. Just wanted to understand the drop in the top line, about 40% compared to June 23. Even QOQ, it's a big drop. So what's the reason for that?
So if you see, the top line of ours is basically, if you see the last year, last quarter it is 463, but out of this 208 crore is from the Vivad Se Vishwas. So if you exclude that 208 crore, then we are coming roughly around 254 crore. That is the operating revenue against the 206 crore in the current financial year. So that certain roughly around 50 crore reduction, 45-50 crore reduction is mainly on account of there was a election. So the first quarter got impacted due to the operation into the election period. Some lag over will remain into the second quarter also. So that will reduce the turnover of first quarter. Second quarter also will remain approximately the same. From third quarter onward, the new order book and existing order book both will add and then the turnover will increase.
Okay, so second half looks strong for us.
Second half looks strong for us.
Okay, that's it from my side. Thank you.
Thank you. The next question is from the line of Dheeraj Ram from Ashika Stock Broking. Please go ahead.
Hi, sir. Thank you for the opportunity. Just wanted to know what is the bank limit or bank guarantee that we put while bidding. I want to be specific here. What is the performance bank guarantee and what is the advance bank guarantee that we put with the bank while bidding for a particular project?
It depends on the project to project and state to state. So it starts from there are 1% to 5%, which is the performance bank guarantee. That depends which are the project we bid and which are the tender condition. Advance bank guarantee, since we have the fund, we will not take the advance bank guarantee. So basically the 5%, 1 to 5% is the bank guarantee, which will be required for taking of any project. Earlier, there were few projects which has been come without the bank guarantee. I don't know in future also if any project government may announce into that. But at the moment, whatever tender is there are ranging between 1% to 5% performance bank guarantee.
Got it, sir. And one more question. How do you see an uptick in your margins? You have given a double-digit margin guidance for FY25. And how and why do you see uptick in margins?
These are the tenders, because if you see existing tender, one, there is a limited player remain into the EPC and into the water sector who has the qualification what we have. There are 4-5 players that only remain into that. There is a enough business opportunity which is there. So there is a less cut-through competition into that. And then we have the select expertise and our control into the various cost elements into the subcontractor, supplier, etc. So all these projects which we are evaluating only if it is more than double-digit margin. and which are
One.
There are enough projects. This 10,000 crore which we are targeting, all are more than double digit.
Okay, got it, sir. And last question. Do you see any increase in order inflow from wastewater treatment? Because we have seen in budget the focus on wastewater treatment plants. So
recently announced the fundraising on the Amrut. So these are the wastewater. So this will keep on. If you see in the water, the World Bank has given at least India needs the 20 lakh crore investment. And the government also realized that if they are not focused and make the investment into the water sector, India will face a serious crisis on the water. When we say about the water, it is in all round, because one is the pipeline, second is the distribution to the household and irrigation, third is the sewerage. So all the three areas you will find good development, good growth, good business opportunity. Over and above, there is one more opportunity which are going to come, which will be in big way, is the river linking. That is, the government has also decided. There is some 2 dam linking we have in the Sony 1, 2, 3, where we are developing all the 3 projects. But these are going to come, which will further make the investment into the country on the water sector. So if you ask me, my personal opinion, roughly around 20 to 25 lakh crore is going to come into the water, and the execution will be next 10 to 15 years. So in the water sector, the growth story will be in next 10 to 15 years, which is going to remain.
Okay, sir. Got it. Thank you.
Thank you. We take the next question from the line of Subhash from Value Investments. Please go ahead.
Hi, so thank you for giving the opportunity again. I was just calculating the revenue as per your guidance. So from the last year's revenue, I took out the amount that you received from Vivad Se Vishwas. So even after taking that amount, your revenue was, for FY24, was more than 1,000 crores, right? But now when you said 50% of the 1,100 crore order book that you have will be executed in this year, it will come only up to 500, 600 crore. So I'm assuming that as you win orders in Q2 to Q4, considering all that, will you beat last year's revenue?
No, beat or no beat, so we will decide in the every quarter based on the order book we receive. But If you see, as I told you, 2,000 crore JV and my own order book we have, our share of JV and our own order book I have, 2,000 crore, roughly around 40 to 50% are going to get into this year. So this will be roughly around 800 to 1,000 crore is we are going to give into this financial year.
But that doesn't affect the top line, right? I mean, the JV part, I'm saying.
That will affect the top line because this is our share of JV, so it will come into our
Okay. Got it.
Now, whatever order we will win, which will keep on informing to you and to all the investors through the stock exchange, whatever, how much we will execute, that will add into that.
Got it. So out of the total 2,000 crore order book, your own plus your share of JV is how much?
This is our share of JV. Together we are talking about. Only our share I am talking. So roughly around 1,000 crore you can say.
Okay, got it. Fine. And can we expect any rating upgrades? Because I think as per the last rating report, it only said that the company or they did not cooperate to give more information. So, I mean, since you will be looking for fundraising in the future or you would need funds for order wins, right? Would you be looking for rating upgrades in the near future? Your balance sheet is a little cleaner now.
We are discussing with the rating agencies.
Okay.
And we are discussing with them. Maybe this financial year we may get the upgrade in the rating also.
In this year, okay, great. Okay, sir. So out of the total order book, is it pure EPC order book or you have any other project as well?
Only EPC, because we are
only EPC.
So okay. Our order book is only EPC and mainly on water.
Okay. Thank you, sir. Okay.
Thank you. I now hand the conference over to Mr. Manoj Tikka for closing comments.
Thank you very much. Thank you very much for giving your time, and we will be happy if anybody has any specific query to be discussed or one-to-one. Ad Factor is our IR agency. So any information you want, the Ad Factor, you can approach to the Ad Factor also. We have Mr. Kapil Joshi. He is our investor relations. So anybody has any want, any information, they can approach to the Kapil Joshi. And we will be happy to meet and resolve any of your query at any point of time. Thank you very much.
Thank you, members of the management. On behalf of SPML Infra Ltd, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.
Thank you.